Hi, everyone. I am Rochelle Bryan, former IRS. I worked in the small business division. Let me share with you some tips. So, number one, the IRS considers NIL income business income if it comes to you in the form of a 1099, which is most NIL income. So that means you have to treat it as you would any other business, picking the right business structure, separating personal from business accounts, having a business bank account. That means record keeping. That also means filing the right tax returns. And we all know making sure that you take the right deductions. Number two, non-cash gifts also counts as compensation. So if someone paid for you to fly out somewhere, someone gave you a car, jewelry, sports gear, sneakers, even a case of Gatorade, you have to take that value and report it on a tax return in most cases. Don't forget, non-cash gifts are still compensation, compensation, compensation. And then number three, a lot of times you are asked to go out of state to make money. Well, guess what? If that state has an income tax, you have to file a return at the end of the year if you made income in that state. So for example, let's say you live in Georgia and you play for UGA, go Bulldogs. And then someone in like an organization in Maryland says, hey, we would love for you to come out and sign these footballs for all these kids who just really look up to you. And they pay you. Well, at the end of the year, you're going to have to file your federal tax return, your Georgia tax return, as well as your Maryland tax return because they do have an income tax. And then number four, like I said, treat this like a business. So you need to keep good tax records because anyone who gives you anything is going to be reporting to the IRS. So if you don't report it, you're going to get into tax trouble. So make sure your records are clean. You're tracking everything that's coming in as income and also everything that's going out as expenses so that you can make those deductions. Now, that's not just going to keep you out of IRS trouble. It's also developing really good business and financial habits from when you're young. And then number five, the best tax strategy is going to involve shifting that income, that NIL income, into assets that produce more income, but they're more tax advantaged. So I hope that was helpful. If you want more tips, make sure you like and you subscribe. And of course, if you need help, just give me a call.